The following is a presentation of TFNN, live at TFNN, The Money Masters. Now, The Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the September 11th wonderful Wednesday edition of the Money Masters Show. I'm your host, Steve Rhodes, and I am grateful for your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with the tools that empower human potential. Because living up to our potential, folks, that's something you and I, we must master each and every day. So let's begin our day with an empowering belief. It goes like this. You must know that in any moment, a decision that you make can change the course of your life forever. The very next person you stand behind in line or sit next to on an airplane, the very next phone call you make or receive, the very next movie you see or book you read or page you turn could be the one single thing that causes those floodgates to open. And all the things that you've been waiting for, well, they will fall into place. I consider myself to be a very lucky man, in that I've always had the drive and the persistence to pursue my outcomes in life. It's allowed me to have some extraordinary experiences, both good and bad. As many of you know, I was once in the novelty photography business with stores in every major theme park and tourist destination around the world. Yes, I've traveled the world over and over. In fact, 2.5 million miles plus on Delta Airlines alone. But like all great success hunters, I've had a few failures. Two of them always bothered me up until September 11th. It was the one big one that I thought had gotten away. That one big one was a location at the top of the World Trade Center. And as far as how close I was to bagging that one, to have a photo concession at the top of the Trade Center, well, as close as you can get without actually getting the job done. Watch those towers fall. In some strange way, I was reminded that failure is not always a bad thing out there. Of course, it wasn't long after that I received a call from some Walt Disney executives and updating me on the strategy for the parks and the concern that they had for Spaceship Earth. The song that Al played before the show, that was from Epcot Center. That was one of my first locations out there in my crystal business out there. That store was only a couple hundred yards away from Spaceship Earth. And they were talking about, the Disneyland castle, the Disney World castle, Spaceship Earth being potential targets out there. Well, I had a store a couple hundred yards away from the Disney World castle and one inside the Disneyland castle. So, September 11th, it had a profound effect on me, absolutely out there. And, it's a good day of remembrance for sure. So, the question is always the same. The question for each of us is this. Not what we would do if we had the means or the time or the influence or the educational advantages. The question is always, what is it that we're going to do with the things that we have now? And the reason is because you and I, we just simply have an amazing power within us to accomplish anything it is that we want in life. Go out there, accomplish all of your dreams, folks, because they are yours for the taking. Let's go check out the dreams in the markets out here. Right now, you've got the Dow up 43 points, trading out at 15,234. S&P off 3, trading at 1680. The composite down 17 points at 3711. Russell 2000 off 3 points, trading at 1052. Leading the charge to the downside is Apple. Big disappointment out there. I think later on in life, people will realize that disappointing news out here with that little thumbprint, with the mere fact that what they really want to do is they want to get into the credit card industry, the credit card business, folks. Yeah, that is going to be the game changer. So we'll see how far they're able to push Apple down. We can take a look here. Netflix, that's trading off about $6 now. That's down about almost 2%. Restoration Hardware, RH is a ticker symbol. They're off 6% this morning, down $4 and change. To the upside, it's Synex Corp. SNX is its ticker symbol, up 17%. Baidu up 3% this morning, up 4.43. Domtar Corp. UFS is the ticker symbol. They're up 4.5%. FleetCor FLT up 2.50. IBM up $2.82 right now. That's trading out at 189.42. Our call-in number, 877 927-6648. Let's start off by taking a look at the VIX index yesterday, cracking the 50-day exponential moving average out there, folks. That's big. That is important because when the VIX is below the 50-day exponential moving average, one of two positive things happens. It's either a continued move up in the marketplace or a consolidation, but it is not a move down inside the market out here. So that's going to be something to be paying attention to, something to think about. In fact, let me switch over and take a look at the New York Stock Exchange. Let me see what it's doing here right now because we get a better feel for what that's only off 18 points. So that's down. That is down of all the indexes that are in the red. That's down the least. So less than 0.2% out here. Net decline in issues only 710. So not really a bad deal out here. So the VIX is below the 50-day exponential moving average. We just simply need to be paying attention to that. Let's go take a look at the S&P 500, see what it is doing. We've got the S&P 500 right now traveling out at 1680.29. This is just an inside day here right now. What the S&P 500 did do yesterday was got back inside its rising price channel, crossed the 0.618 threshold, which was 1678.27. That sets up a potential run to the 1682-ish range out here. Is it 1680? 1690. I'm sorry, 1692-ish area. We're at 1680 right now. So 1693 would be your 0.786 retracement level. It looks to me like that is what the S&P 500 wants to do. Let's go take a look at the Dow. The Dow right now, that is the strength, believe it or not, inside the marketplace. Yesterday, this closed above the 0.382 level, 15,104. The Dow is on its way to 15,316. It's going to try and get back inside its trend. So long as the VIX stays below that 50-day exponential moving average, that is where the Dow is headed. That trend line, you can draw that on your charts. Just use the low of November 16th as your first touch point, and then the next touch point, go ahead and use the low of December 31st out there, 12,883. If we go take a look at the Russell 2000, Russell 2000 here, gapping up yesterday. It wants to go tag that swing point high from August the 5th out here. That level somewhere around 1057 to 1063.52 out there. So just an inside day as we speak thus far inside the Russell. If we take a look at the NASDAQ composite right now today, getting down and trying to close the gap from yesterday, looks like that's what it's doing. The low of yesterday, or the high of yesterday, 2 days ago, I should say, the high of September 9th, 3708.42. So far it got down to 3707.65. So it has tagged and closed that gap. So we'll see whether Apple is able to continue to keep this pressure on inside the markets out here. But so far, no real reversal signal. Take a quick peek here at the NDX. I suspect we'll see the same thing. It is trading inside the September 9th swing point out there. So far, so good, not falling apart. Lastly, let's take a look here at the NYSE, New York Stock Exchange. It's having an inside day. Nice big gap up yesterday. If we take a look at its retracement here, this is really where we want to be paying attention to. You can see still above the 0.786 retracement. That says that the New York Stock Exchange does want to go tag 96.90.10 out there. That would be the swing point from August the 2nd out there. Let's go down to Sarasota, Florida, and speak with Dan. Dan, thanks for calling. Thanks for holding. How are you today?
Pretty good, pretty good. This is John, actually.
It's John. There we go. Well, I recognize the voice. So, John, hello. And we'll just have to go ahead and, I don't know, Al, he got it wrong. We're just going to send him a few Q-tips out there.
Okay.
You want to take a look at the YCS out there. Now, is that the long or the short of the U.S. dollar Japanese yen? I can't recall it off the top of my head.
Well, it's actually the short, I think.
Short, okay. So let me take a quick peek here. So are you in the trade on the YCS? You're looking to get in the trade?
No, I'm in it. I thought it was going to 67, but it looks like it's only going to 65.
YCS. So YCS. So now when we take a look at this here, let me see if this is trading in the direction. That is the ultra-short yen. So, no, I think the yen here still has the chance to move up into the so let me go ahead and we'll switch over to the yen chart because you really should trade it off of the yen. Now, what I like about the yen chart here, John, is I'm taking a look at the A to B equals CD pattern first. And that A to B equals CD pattern, I'm using the swing point of August 8th. That low at 95.79, and the high here on August the 23rd out at 99.14. And the pullback here, let me see what that retracement level was, just to see if it was a 0.618 retracement, and it was a 0.618 retracement. So normal retracement on the move back. And it completed the 1-to-1 A to B equals CD on September 5th and had this bearish engulfing candle that took place on the following session, September 6th. And yesterday, price closed above that area. You'd like to see it close back above there again today, somewhere above 100.18, because that would be a confirmation signal that would be acting as a support level out there. But even if it does close below this, that resistance level really was taken out, so it's kind of a questionable line. I believe that what the yen wants to do here, looks like to me, it wants to move up to 101.05. And if we go take a look at the YCS and see if we can find a similar A to B equals CD pattern here, what I would be using here, John, is I would be using the low of the trading session from August 8th. That's at 59.45. The high I'd be using would be August 23rd at 63.46. And the 1-to-1, that was completed. And you're targeting the 65-ish area, I think. Is that or 67?
67.
67. So it most certainly can do that. That would be your 1-to-1.618, A to B equals CD up. I think the YCS, you're going to have to trade it side by side with the yen chart out there. And of course, as you know, the yen's trading all night long, all morning long, where the YCS isn't. But it does still, to me, look like a good trade. And you've got a couple ABC patterns, because we can take a look at the larger one, which is coming off of June 13th's low, all the way up to the B point would be July 5th, and then back down to the area of August 8th. And that 1-to-1 would be 68.57. So I think your target of 67 or 68-ish is still a viable target. At the moment as we speak here. I think the good news is that the Japanese won the 2020 Olympics out there. So it sounds like they're going to be pumping money into their infrastructure for a long time to come out there, because they want to certainly weaken the yen, and, why not just put it in infrastructure out there? So far the trade looks okay to me.
How about the EWJ?
The EWJ. Let's go take a look at that. The EWJ is the iShares Japan ETF. Now that's for the Nikkei. I don't. Does it track the Nikkei? I don't know if it tracks the Nikkei, but let's at least go take a look at the Nikkei, and then we'll figure that out. So we'll put up the EWJ right after we take a look at the Nikkei. Now on the Nikkei, what it did last night, and I suppose the handoff that our markets give to Asia will be pretty important here. And what the Nikkei did last night, John, if you go from its swing point high from July 19th, 14,953, down to the low that was put in on August the 28th out there at 13,188, it made the 0.618 retracement last night, but no reversal candle yet. Can you stay through the break?
Yep.
Okay, we come back. We're going to John in Sarasota, Florida. In the meantime, I'm going to go get Al some Q-tips, and we'll just get rid of some of the wax out there. We'll be right back, folks.
Andy Hecht, the host of the Commodities Hour, recently launched his newsletter service, the Technomental Commodity Report, and only 6 weeks in, Andy has already recorded a triple-digit winner. Andy advised his subscribers to purchase a long-term call option at 46 cents on July 11th, and then sent out a special update Friday, August 16th, advising his subscribers to close that position at $1.40. That's a 204% profit in just 5 weeks. The Technomental Commodity Report by Andy Hecht is released each Thursday morning, and right now you can get a month-long free trial to this subscription while locking in the low introductory rate of only $39 a month. Andy Hecht has been a commodities trader for over 3 decades. Let his experience work for you. Sign up for your month-long free trial to the Technomental Commodity Report today at TFNN.com. TFNN is having an open house in the Tiger's Den for 2 weeks, and the best part is that everyone is invited and you just have to be a member at TFNN. The open house in the Tiger's Den has already begun and will last through our week-long virtual trading competition, which ends September 13th. Use this time to exchange trading ideas with other traders in the virtual chat room and to discuss trading strategy. For all the information and to take part in the Tiger's Den open house, log on to TFNN.com today. You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a 2-week free trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com. McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a 3-fold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's up 32. S&P is off 5 points. We're going back out to Sarasota to John. We are going to take a look here at the, I grabbed the wrong chart out here. We're going to take a look at the EWJ. We're also studying the Nikkei out here. So, John, what I don't know is if the EWJ is supposed to replicate the Nikkei out here. I think it's very close to it. Right now, the EWJ is at 1152. And if we take a look at what the Nikkei did last night, it had formed this smaller, if you're watching this on Tiger TV, it had formed this smaller Gartley buy pattern. Nice 1.272 Gartley buy pattern. And in essence, the primary outcome of any Gartley buy or sell is that it goes ahead and it forms a 0.618 retracement. So in this case here, inside the Nikkei, that's coming from the high of July 19th down to the low of the session on August 27th. And it completed that pattern, last night. Now, just because it's a red candle, that's not a reversal signal. So it completed that pattern. It can, it completed the 0.786 retracement. So one of two things is going to happen. If the Nikkei can get above 14,575, what it might really be doing is setting up the next A to B equals CD up. And that's what you would really be looking for inside the EWJ. So are you an early entrance into the EW trade, or are you looking to get in on the trade, or,
and I'm going long, so...
You are in the trade, or you're looking to get in on the trade?
I'm in the trade.
I'm sorry, you're in the trade?
Yes.
Okay, so if you're in the trade, have a stop in place here, but I still wouldn't have enough information I don't have enough information here that this thing that the move is over. Are you in a good profit position on it, or?
No.
No, you're not. Okay. Well, that might change things just a tad here, because you're up against a normal spot where price would basically move up to and then begin to pull back from that. And, if we didn't have this other larger buy pattern, this yellow pattern in the Nikkei, this is the one that I'm looking to see if price can move back down here, and that pattern is still in play. See, the larger pattern is still in play. Only if price gets above 14,953 does this pattern that I've got, the yellow pattern in here, really get violated. So I'm still just kind of sitting patient to see if we can get the Nikkei to move down to 11,673. But you might be correct on the trade versus what it is that I'm looking at. But you're at a point here where I think you need to be somewhat careful or expect a pullback. And if your long-term horizon, is that this is a longer-term trade, then you might be able to sit tight because nothing's really changed on this. So that's my take on what's going on right now inside the EWJ, assuming that what it trades, the underlying instruments, really represent the Nikkei 225.
Well, okay. Now,
all right.
Yeah. Now, I think I listened to you the first day that you were on the TFNN.
The very first day?
The very first. And you have come a long way. You're really getting good.
Oh, well, thank you very much. I appreciate that. That's the nicest thing that anyone has said to me, so I appreciate that. I can tell you that very first day. I remember when Tom, approached me and he said, hey, you want to do a couple hours worth of radio? We're looking at trying to expand and go to 8 hours a day or what have you. And I said, sure, I'd like to, I'll go ahead and give it a shot. And, man, the hours and hours worth of preparation and everything. And it was like anything new that you do in life. You want to be good at it, and it's kind of like the first time I swung a golf club. I'm way better now. Of course, I still hit some pretty bad shanks, and I probably do that during the radio show too. But all in all, I really do appreciate that comment, John, and thanks so much for listening, and thanks for being there the first day.
Yeah. And
that's
you're
great.
using charts, right?
What's that?
You're using Ensign charts.
Yeah, I use 3 different charting software packages, and when I'm doing the shows, the worst nightmare when you're hosting a show like this is your system shutting down. Now, I've got all the backups and all that kind of stuff, but nothing. And I do have some game plan Bs because I've had this, the system freeze up on me. But still, even when it does happen, even though you've planned for that event, it's like, oh my goodness. So I do use what I show on the air here is the Ensign software. One, because I trade the Gartley patterns, and it's just I've been using it for so long, it's easy to. So really, I would say there's 4 primary software packages I use. That's one. The second one that I use is the art of timing the trade charts. Now, when I take a look at different tools out there, and I like different indicators, are there any indicators that you use when you're putting on a chart? Well, we're going to break. I'll tell you what. Hey, John, thanks so much for calling. I appreciate it. When I get back, I'll just share with you some thoughts on some of the different software charting packages out there. 877-927-6648. We'll be right back, folks.
With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter, Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow's up 36. S&P is off 5. And after we go to this next caller, I'll go through a couple of different charting, some of the software packages I use or the tools that I use and why, and just to help better answer the question that John had thrown out there. But let's first go out to Janice in Bucks County, Pennsylvania. Thanks so much for calling, Janice. How are you doing this morning?
Good, Steve. How are you?
Excellent. Appreciate your calling.
I enjoy your show every day.
Well, thank you very much. We really appreciate that. You wanted to look at, is it Monsanto? Is that what you wanted to look at?
Yes, that's correct.
Okay. Are you in the trade, looking to get in the trade? Tell me how I can help you.
I am actually looking to get in the trade, and I've been watching it for a while, and it looked like it was in a downtrend, so
yes.
I was actually looking to take a short position.
Okay. All right. So if we take a look at Monsanto, right now it's trading out at 102.38. Now, is this going to be what time period? Is this a longer term? Because you said you've been looking at it for a while. So I just was curious, is this a longer term position you're trying to get into, or just a short term trade?
It would most likely be a short term trade. I was kind of waiting for it to come up to a level where it seemed like it was in a resistant point there.
Sure. Okay.
And I don't know that I'm kind of in the middle because I don't know if it's going to break the resistance at this point or come down.
Sure. So, let's take a look at Monsanto. MON again, folks. That's the ticker symbol. And so we're taking a look at the trade that Janice wants to look at. And I got a better feel for what we're doing. So if we take a look at what Monsanto has done here. By the way, today's candle session, that's a bearish engulfing if we were to complete like this. And that would be important to understand because a bearish engulfing candle would be taking place at the last downdraft that this candle had. So as we take a look at, when you take a look at developing resistance and support lines, you can take a look at diagonal and then horizontal lines. Horizontal lines have more importance than the diagonal lines out here. So it's really the horizontal area that I'm focused on first, even though that's not what's drawn in on the chart here on my screen. Let me go ahead and put that in black out here. So what Monsanto did on the trading session of July 24th is it gapped down with 3 million shares, twice the volume as it made with the high on July 23rd. And yesterday, it made its way up there on a little bit lighter volume, 2.8 million shares. So the bearish reversal signal potential, and it'd be very easy to create a bearish engulfing candle today because yesterday's body was so small. But coming into a natural resistance area, this would be suggesting that the possible up move is over inside this stock. Now, the problem there is you are exactly right. This was in a downtrend, and I'm using a set of channel lines here, and I'm using the close of the session for May 15th, and that was at 109.22. And then really the next session that I'm using for the channel line is really the open of July 23rd. And that open was at 104.14. So if you use those two touch points, even if you don't draw the channels like this and you just use a line tool, that would be very good. Now, in this case here, it broke through the channel line on the trading session of September the 5th. So that was bullish. Came back inside it with a little bearish engulfing candle on September the 6th, and immediately moved back out on the very next trading session. So it was really giving you the signal that it wanted to go ahead and break out and trade higher. But whenever you break out of any kind of uptrend or downtrend, you've got to go find where's the next area of support or resistance, and that's where it's really run into. So your trade to sell, if it hadn't busted through this price channel, I would say now might be the time to do that. But knowing that the extent of the move, all this has to do is come down and test this price channel maybe another 1 or 2 times, and if it can't bust inside of it, what it actually wants to do is bust up to the outside. If it can get back inside the price channel, then what it may do is run all the way back down to the bottom. So, does that help you to understand what it's actually signaling to us at the moment?
Yeah, I think it's a wait-and-see type thing now, where, like you said, if it's holding that resistance, it may want to go up through it.
Yes, and today's session is long from over. So what we have to recognize is it did close into the gap, albeit on lighter volume. It closed into the gap yesterday. The top of the gap here would be the high of the July 24th session, 102.85. You're at 102.48, but we're still away from the session being over. And if it continues to close inside there, then it wants to at least go test the 103.50 to maybe 104.80 level. And then what I would say is, hey, you know what? This thing is broken through some areas of resistance here, and what it actually may want is higher price. And your better times to buy something that you're sitting on and waiting for might be when the equity gets down. If you utilize the relative strength indicator, which is a momentum indicator, you'd really like to buy an equity when it's in the oversold condition, when it gets down towards about the 20 to 30-ish threshold level of that indicator. Your best buys come from there versus when it's up towards the overbought zone, when it's up towards the 70 level. Because when you're buying something near the overbought zone, and not that you can't, but you're giving away a lot of momentum. You're giving away a lot of points. Your entry into it, you may get stopped out a number of times trying to get in that long position. So try to put that tool along with the other tools that you might use out there. All right, Janice?
Entering into a short position, would I more or less look for an overbought sign in a short position?
You really would. And if you take a look here at the time period here in Monsanto, January 8th all the way up to the high that was put in on February 25th. You can see it was traveling with inside an overbought zone. Now, just because it gets overbought, that doesn't mean you pull the trigger. You really like to use your friends, the bullish and bearish candles out there, in order to make that determination. And we never saw that until it really made its high back here on the trading sessions of the 24th, 25th, and the 28th of January. And then you've got to take a look at targets. And in the case of Monsanto, the reason to potentially not have taken that short trade, even though you were looking to take a short trade when it got into an overbought condition, was the mere fact of the trading session on January 8th that pushed it into that overbought area was a breakout. It was a breakout with wide price spread and accelerated volume. And you can see when price in Monsanto moved back there, that's exactly where it stopped dead in its tracks. So it may not have been the right reward to price, risk to reward ratio for you to make that. So. But use this tool because you want to use this tool to help you identify where it is you should be looking at taking the trade. But then you always have to go take a look at, okay, now where could this thing go to? In the case of something that's going to break down, where's the areas of support?
Okay.
Alrighty.
Thank you for all your time.
Hey, my pleasure. Thanks so much for calling. Have yourself a great day.
You too. Thank you.
Now, folks, during that call, we were using a couple of different tools. So John was asking me, he asked the question, do I use Ensign Windows? Well, the obvious answer there is yes. But I use multiple tools out there and multiple indicators. And one of the indicators that's on here right now is that relative strength index. And as we take a look, what I want to explain to you is the following, because each of you probably use some type of indicators out there. And it took me a lot of time and a lot of money to learn this and to understand this. But indicators basically fall into four different categories. You've got indicators that measure velocity, or what I really refer to as momentum or speed out there. And then there's a set of indicators that will go ahead and measure energy. Well, the tool that I use to measure energy, the best tool that is out there, in my opinion, is the power law vector indicator, which is a part of timing, as the art of timing the trade charts out there that Tom and David had put together. And so, and that's a very important element because it measures the angle, the actual energy inside a move, which to me is different than volume. Volume is a third area of a chart that you want to be paying attention to because that's where you're taking a look at supply and demand. And in essence, we did that in taking a look at this chart here with Janice when we were taking a look at a breakout area and where price might fall back to out there. And then you've got volatility, liquidity. And there's a number of different indicators out here. A lot of times what I find when folks are just getting into the different indicators is that they don't realize that sometimes they might focus on two indicators, but the reality is they're measuring the same thing. As an example, I utilize the relative strength index as a primary indicator, and Basil uses stochastics, and both of us use these two indicators, for our needs, for placing trades, for communicating to you what is going on, and both of these work. Yet there's an 85% correlation between the two. So there's no reason for me to use stochastics, and instead I use the relative strength index out there. So you only really need to become an expert at one of those. Now, sometimes one will work better on one chart or one index or what have you. I find that, the 85% correlation is good enough for me. Now, there's other velocity indicators out there, or momentum indicators. There's the what's it called? The Fisher transformation RSI. There's a dynamic momentum index that's out there. I think it's the Shandy, if that's how you pronounce it, momentum oscillator. There's the CCI. There's something called an accumulation swing index. I mean, there's a number of different indicators. You've got to use the one that works best for you. That energy indicator, I have found that it's the power law vector indicator that gives you the best results. You could use other velocity, or not velocity, but energy indicators, verticality, whatever you might call it. You could call it there's an indicator called the Arun indicator. There's one, I think it's Donchian, it's spelled like Don Chain, Donchian channels. That measures energy and verticality. There's the GAN swing bands that are out there. There's the MACD, and I know Basil's a big user of that. That is really measuring energy in the marketplace. So there's a number of different ones that you can use. I also use other software tools. So I use the art of timing the trade charts. I also use Ninja Ninja Trader. I have software applications that I've developed, my own proprietary trading system indicators. These actually show you my trade. So I was long the ES Mini. I was on the show a couple days ago. We were tracking the trade out here. These show you the spots where I've created my own little black box system, and it helps me to identify both long and short trades inside the market. For me, I am agnostic as to what direction the market wants to go. I would prefer to just sit back and read the message of the markets and trade in that direction. And so you can see there were a couple of different times where I added to my trades here. Even this shows one contract, but I trade multiple contracts out here. And you can see the exit inside of the trade. So right now I'm flat, this market. When it comes to the ES Mini, I don't have a good direction at this stage, whether it's with the proprietary software that I've written or anything else, any other tools that I look at. I am actually waiting for a pullback to take another long position inside the ES Mini. So I've got plenty of indications out there. I like to trade in the direction of the trend, and it's really going to be the NQ that, as you know, if you listen to the first hour, that I'm going to be paying attention to, because if, in fact, the NASDAQ, whether it's the NQ or the Qs, in fact, let's switch over, see what they're actually doing here right now. Let's go take a look at the Qs, because if the Qs start to falter, we already know the Dow itself is weak, so it may just be having a counter trend rally out there. And if the Qs start to fall apart, which they have not as of yet, we'll take a look at Apple. The Qs are trading out at 77.65, but the Qs are up against, they have not broken back into the lower part of its range here. They broke out of the lower part of the range 2 days ago with that nice bar on September the 9th out there. There were 25 million shares. That was going against a swing point with 27 and a swing point with 23 from August the 13th. And yesterday did volume of another 27 million shares. So you do have volume off of that high, but we don't have we're not back into the bottom part of the range out here. So it's not, for me, that's not there's not a bearish signal inside the Qs here as of yet. Hey, you know what? You get back inside the price level, we'll call it 77.28, and maybe that becomes a different picture, especially if there is some volume off of the top. But there was no way that this market was going to roll over when we took a look at the composite, when we took a look at the NDX 100 out there, even the Russell 2000. But it was really more the composite and the NDX that were, and it was really the composite most of all, because of the number of stocks that you've got inside the NASDAQ composite that was saying wasn't ready to roll just yet. So those are the different tools that I like to use. I've got one more software application, Metastock, that I also use. It's got a number of great tools with inside that from a charting application package. So hopefully that just helps to, I'm sure I gave more information than less, which is fine, to answer John's questions. But there's great tools out there, and one that I would like you to use to really measure energy, Power Law Vector Indicator. So go over to the homepage at TFNN.com. You know, you can test drive that software if you have not already. The nice thing about that is it automatically scans to find your Gartley and butterfly patterns out there. So it's identifying swing points. There's so many different great aspects of that software package, and you really should give it a try out there. It was actually the very first charting software package that I purchased was from Tom and David, the original package of timing the trade charts out there. So let's continue looking at the ETF structures out here, because before that I was really just a fundamental trader. But, man, there's nothing more fundamental than technical analysis. So that was the Qs. Let's go take a look and see what the Dow is doing. We'll do that through the Dow Diamond, see what it is doing here as we speak right now. It's trying to trade into that downdraft session from August the 15th, a natural area of resistance, which is a high of 152.10. 10 million shares on the way down there. So far today, it's trying to take it out with about 2 million shares, and we are now about an hour and 20 minutes into trading. 877-927-6648. We'll be right back, folks.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzavento's trading newsletter,
Patterns, Profits, and Peace of Mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.6% profit to an incredible 48% profit in just one equity. And all 6 of those winning trades had been initiated no earlier than just the previous month. With the 600th weekly Gold Report issue fast approaching, Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began, and right now you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber, as this volatile gold market provides trading opportunities after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial to the Gold Report today by visiting TFNN.com. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. And, for those of you that are taking part in our $10,000 TFNN virtual trading program, congrats for participating. Remember to go ahead and make sure you place your trade today because you want to get in on our 5 daily randomly drawn winners out there. And congratulations to X Vang. He or she is leading the charge, $28,000 plus in profits in 2 days' time. Then starting with a $25,000 balance out there. And Gil, $27,911 to be exact. So that is a nice profit. W Bar, $17,000 and change. J Main, $17,000 and change. D Phillips up with $8,500. D Gelt Tima up with 7,200. So some nice moves out there off of a $25,000 balance. Yesterday's daily winners, G. Bjornberg, M. Sadri, K. Sullivan, D. Michelle, and JCO is the name for our daily drawing winners out there. Remember, it doesn't have to be a winning or losing trade to qualify. You just need to place a trade today, even if you're not part of the, but just because, we've got 3 more days to go, folks, so there's some big money that is being made out there. Talk about big money. Let's go check out Apple, see what it is doing here right now, traveling into its last real breakout area, into the support zone, doing it with volume today. No question about that. It had recently broke out on August 13th with 32 million shares. Today so far, in the first hour and a half of trading, back with 16 million. We'll see if it can hold this support zone out here. If, in fact, that area fails, we will see Apple probably come back and close this gap, test this gap that was created on July 24th out there. Not so much volume there, 21 million shares on that breakaway. We do know there's an area of resistance with inside Apple, and that was set up by this large downdraft session from January 24th. 52 million shares to the downside. As price got back up there, it was not able to hold. So, I shared with you my thoughts with regard to Apple and its announcement yesterday, and I think unless they totally blow it here, the market has actually missed what the announcements were really all about. But what I do believe is if Apple can get this, and I haven't read enough about the fingerprint system, so I need to do that, need to see how the new phone comes out. But the reality is, what it looks like to me Apple's trying to do is to change its business model. It's already been able to tackle the music model out there, so they're well enough entrenched in that business. And now what they want to do is they want to get into the business of these guys right here, Visa, MasterCard, eBay out there, and they want to be a big player there. And as far as I know, Visa doesn't have a cell phone or a tool other than a credit card company, nor does MasterCard, and nor does eBay out there, and really nor does anybody else for that matter. So I think that the market and the way that folks are looking at this thing are totally blowing the what I believe is probably one of the largest opportunities, way larger than what you could do with regard to the music business inside Apple. Because all you got to do is take a look at how often you use a credit or a debit card, and if you could use a phone instead, and recognize that the fees in there are 2.5%, whatever it might be. That's some pretty hefty numbers. That is way more revenue, and I don't know why they didn't come out and actually say that yesterday. But if it were me out there, that's what I would have been out there. And so maybe Steve Jobs did have something else up his sleeves, just got some bad communicators on the other end. But you know what, folks? Coming up on this end, we've got another great communicator, and that is Basil Chapman. So stay tuned for Basil's show. After that, because it's Wonderful Wednesday, we go out to Larry Pesavento. After Larry, it's Daryl Martin, then David White, and then the Tom O'Brien Show from 4 to 6, folks. Have a great day. Look forward to seeing you in the morning.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position at Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.